Hey everyone, welcome to Alpha Insights. I'm Riley, your accessible investment news host.
And I'm Mark, here for a laid-back take on the markets. And hey, if you have questions while you're listening, drop them at stockalpha.ai.
Quick housekeeping. US stock markets are closed for Good Friday, so any equity references are as of Thursday, April 2nd, and the next trading day is Monday, April 6th. Crypto, though, trades around the clock, so we'll talk about developments that are still unfolding over the long weekend.
Yeah, that's a good point. There's a lot to unpack, so let's jump in.
Big headline this week. Charles Schwab is laying the groundwork to let clients trade spot Bitcoin and Ether inside what they're calling a dedicated crypto account. Schwab manages about $12 trillion in client assets, so even if this rolls out slowly, it's a major signal about mainstream access.
Exactly, and to add to that, Schwab is offering an early access subscription for interested clients and aiming for a launch sometime in the first half of 2026. But the real story will be the operational details, custody, order routing, fee structure.
Right. How Schwab stores the coins and who actually executes the trades will shape liquidity and competition. It's not an instant market-changing event, more like a big door opening that could bring more retail and IRA flows over time. Meanwhile, flows at an institutional level look weaker. JP Morgan notes that crypto inflows in the first quarter fell to about $11 billion, roughly one-third of the pace from last year.
That suggests momentum among big institutions cooled, even though 2025 had record inflows. So Schwab's move could help retail adoption, but institutions might need different incentives to jump back in.
Security and operational risk is another headline. There was a drift exploit that cost about $285 million, and Circle took flack for not acting faster. Analysts say quicker responses might have limited losses, but freezing stablecoins raises thorny legal questions.
Yeah, and add to that a suspected domain hijack at HyperFi and a shutdown from Leap Wallet. Those are the kinds of incidents that keep counterparty risk very real for users.
Which means when someone says easy access, you should also be asking about recovery plans, insurance, and how a platform handles hacks. Data suggests security should be a top filter when choosing services.
Interesting.
Miners are making headlines too. Marathon Digital sold roughly $1.1 billion worth of Bitcoin and trimmed about 15% of its staff while shifting capital toward an AI push. It's a reminder miners are balancing operations, treasury decisions, and new investments.
So you have capital being reallocated away from pure mining, which could affect short-term supply dynamics if other miners follow suit.
And on the cultural side, Jack Dorsey teased bringing back a Bitcoin faucet and a consumer-facing Bitcoin Day idea. It's a nostalgic marketing push, but it could draw attention back to Bitcoin, at least in the short term.
Honestly, I was a bit surprised by that one. Little things like that can change sentiment, even if they don't move fundamentals.
So what's worth watching over the long weekend and into next week? First, any Schwab updates about custody partners, exact fees, and final timing for the launch in the first half of 2026.
Also, statements from Circle or regulators about the drift hack. Legal guidance on stablecoin freezes could set precedent and influence market confidence.
On-chain flow reports and ETF-style inflows are something to track too, especially after JP Morgan's weaker first quarter reading. And keep an eye on minor balance sheet moves and any further sales.
Geopolitical headlines matter as well. There are traders warning that conflict in the Middle East could last longer than people expect, and that uncertainty can drive volatility across risk assets, crypto included.
Bottom line, Schwab's entry is a big adoption signal, but the real impact depends on custody and execution details. Security incidents and service shutdowns keep counterparty risk elevated, and flow data plus miner activity paints a mixed picture of capital dynamics.
Right, and remember, we're sharing context, not personalized investment advice. Analysts note mixed signals, so a selective, informed approach focused on custody and transparency makes sense.
Okay, quick recap together.
Schwab could broaden retail access.
Security incidents keep counterparty risk high.
Flows are softer, and miners are reshuffling assets.
Got questions? We'd love to hear from you. Head over to stockalpha.ai, where you can ask us anything and we'll answer live. And while you're there, check out more market content and our Q&A feature.
Thanks for listening. We'll be back after the weekend with fresh updates. Stay safe out there.